The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September 17th terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, we're going to go take a look at the circumstances of the bulls and the bears, the buyers and the sellers. We'll try to figure out what they're saying to us. I'm absolutely grateful for your presence here. Now, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648, internationally, 727-445-1044. Of course, you can always send me email, steve@tfnn.com. Great to be with you, especially on this terrific Thursday. Of course, this is none other than the Hotel California, sponsored by Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow. She's trading up 19 points at 16,759. S&P trading up 3 points at 1998. You've got the NASDAQ Composite up 17 points at 4906. Russell 2000 up 10 points at 1185. Gold is back $3 right now, trading at 1116. Silver flat up 9 cents, basically. Light sweet crude back 42 cents, leading the charge the upside dollar-wise. You've got Aerie Pharmaceuticals. I may have pronounced that incorrectly, but it's up 76%. They've cured something out there. Must have gotten a good result on a phase, or maybe it's a buyout. I don't know. Regenix Bio Inc. That's up 38%. Maybe we'll check in on both of those. Amazon up $8. Anacor Pharmaceuticals up 8. Shopify. What is Shopify? It's up 21%. That's up $6. Biogen, BIIB, up $6. To the downside, you've got a company called ClareCore Inc. That's down 12% off nearly $7. Allergan is down $5, a little over 1.5%. Tableau, I don't think I pronounced that properly, but that's what we're going with. That's down. I think I was corrected once before, and I do not remember. What. In any event, it's down 5%. Intuit, that's off about 4.5%. Wynn Resorts down 4%. Okay, so where do we begin? Now, I didn't get a chance to listen to any of the other hosts, but my guess is that everybody is pretty much saying the same thing, which is there's not a whole lot to report to you until we watch how the market responds for probably the first hour and a half, probably more so at the end of the Janet Yellen conference. So we'll have the release of the minutes, the statement, then we'll have Q&A. I believe we have got a Q&A period, and then we'll see how things roll to both sides. But what you and I want to do is we're looking for clues. You know, it's like, I don't know if you've ever played the game of Texas Hold'em. I played it for many years ago, back in the 90s, before the game was really popular. So a lot of the guys that you see on TV playing, are guys that sat at the same poker table with me over at what was the name of Wynn's Resort back there? The Mirage. That was the best poker room back in the 90s in Vegas period. Of course, there's so many casinos out there. But in any event, what you're always looking for when you're playing that game, it's not just about playing your cards. It's about being able to play the other person's cards or being able to try to find some kind of tell out there. And really what you and I are going to go do here during the next 45 minutes is we're going to go looking for tells, see if we can get any kind of feel to see if there's any piece of information that is being released to us. So let's get started in doing that. Yesterday, we spent quite a bit of time taking a look at the summation index. So we're going to start there for the New York Stock Exchange. Now, you've got the NYSE. That's the left-hand panel chart that you're looking at on my screen. We've got three panels. We've got the indices broken down between the New York Stock Exchange on the left NASDAQ Composite dead center, Dow on the right-hand side. Now, as we take a look at the New York Stock Exchange right now, you'll notice if you take a look at my blue box, not my blue box, the red box, but the bottom number inside that data box says OSC, oscillator. You'll see that the reading says 155.61 as we speak right now. If the New York Stock Exchange, and it's really all about the close, it's not about what is the reading at 1:12 p.m., although at 1:12 p.m., it is above 150. If this closes above 150, this is going to, it doesn't guarantee you, but boy, it's so close to a guarantee with regard to the market being able to provide you with information. It's guaranteeing you, so we'll use the word guarantee, that you're going to see higher prices to come over the coming days. Doesn't say you're going to be seeing that for years to come, but it does say for days ahead of us. Look, if you're short the market, and that's cool, I don't care which side of the market you're on, but if you're short the market and come 4 o'clock today, the New York Stock Exchange price oscillator is where it is. Don't be short the market. That's the message. Or make sure you've got a stop in place, please, of anything that you would do. I can't tell you what's going to happen next, but what we can do is you and I can go take a look at patterns, take a look at information that's out there. You know that anything can change in a heartbeat. It's the way that it works in life. But right now, and we'll go ahead and explode this up on my screen out here. Right now, and we don't have that much in the way of net advancing issues. If we go back and take a look at exactly where we're at inside the NYSE, you've got net advancing issues 462. So you know that if the NYSE, because maybe you don't have this oscillator on your screen out there, you know that if you've got 460 or more net advancing issues today in the NYSE when the day comes to an end, that price oscillator is going to be above the zero line. And, yesterday, we won't do it today. I don't want to waste your time and repeat what somebody can go take a look at in yesterday's show. Or you can do it yourself. You can build the oscillator, that's for sure. Or you can find some trading software where you can gain access to this. So right now, it's up above the 150 level. That's kind of like jet propulsion territory area. Now, where does that mean that price would move to inside of the New York Stock Exchange? So that's a great question. Now, we can take a look at to the downside and the upside, right? Any good host out here, anybody who's trying to help you understand what the markets are doing, should always be taking a look at both sides of the trade. So certainly we're going to do that here. Now, if we take a look at natural places where price would move to inside the New York Stock Exchange, if in fact the oscillator closes above zero, what we should anticipate is that the NYSE ought to be able to make it up to its 0.618 retracement level. That's at 10,372. If, on the other hand, the market reacts poorly, for whatever reason, doesn't matter what the news is that's released, the oscillator closes back below the 150 line, it's all going to be dependent upon where price actually closes inside the market. I will tell you that the number that you want to be watching for is inside the ES Mini, and that number is 1954. We are ways away from that. You're at 1988. That'll be a big reversal. But you get down below that, and that will be in avalanche territory. So I'm going to give you the territory that says we're still going to the moon and higher. That's just a metaphor, okay? And that we will go to higher price out here. And that's dependent upon the New York Stock Exchange and the net advancing issues. Likewise, if the market behaves poorly and pulls back. Look, if it doesn't get below 1954, don't be getting all giddy and jumping on that short train out there. Even though it's 30 points lower. In our markets these days, 30 points inside the S&P 500 is nothing. But if it closes below 1954, just as I said, if it closes above the 150 level on the oscillator, please don't be short. I will tell you, if you see the ES Mini close below 1954, I will say, please don't be long. That is the message out here. A little wide range, but we've got to go with the cards that are being dealt to us. If there's anything that you can learn about playing Texas Hold'em, it is to play your cards and everybody else's and know what the other person's patterns are. So we're just simply communicating to you the patterns of the market. So at this stage, what's the tell? The tell is New York Stock Exchange is just itching to get above that 150 line, to get into that jet propulsion territory. Now, inside the NASDAQ Composite, the number is not 150. It's 65. Typically, readings above 65, and it's New York Stock Exchange that we really want to focus on, but inside the NASDAQ Composite, getting above 65 in its price oscillator typically means, when I say typically, we're talking, 80, 85%, something along those lines. So a high probability that that's also going to lead to higher price. Now, what the NASDAQ composite is doing is trading right around a natural level of horizontal resistance. 48.88 is the number. We're trading at 48.99. $11 is no big deal. So it's not as if there's been any kind of breakout. You say, where does 48.88 come from? I will tell you that you just simply go back into the swing point from May of 2015, May 6th specifically, and you will see that's the low of that swing point, which is just beneath the hammer candle low from July 7, which is priced out at 49.02. So there is just a natural level which should have been support, which was support. That support was broken when we gapped down on the trading session of August 21st. And then obviously over the weekend, things churned up and the market just simply moved lower. Look, there's volume down there. We have to respect that. We have to understand that. Likewise, and another reason, if you are short, to not be short if the market closes above this 48.88 level. And I'm not talking even 48.99. 11 points is no big deal. But where will price head to if the market responds positively? Inside the composite, it's going to try to get above its moving average line. That looks like that's probably the 50-day. Yeah, you've got actually the 50-day and the 200-day. That's the red and the green line here, trying to get towards a little convergence out there. It has not converged. So price ought to get up to that 49.59 level out there. That would be the next target zone. Likewise, if price moves lower, I'm just going to simply rely upon one number with regard to a long short, and that's going to be inside of the ES mini, and that's going to be that 1954 level out here. If we go take a look at the Dow, see what it's doing, its price oscillator is above 2.5 out here. Now the Dow with the 30 stocks, look, you can take a look at the last couple of times that we've been up here, and yesterday it closed above 2.5. So is that a little bit of a market tell? I don't know. I don't think it's not exactly as if the market tell is cratering to the downside. So it's either a sucker punch that's going to be thrown here by Janet Yellen, and that's possible, or the market already knows how it's going to respond to the news, no matter what in the heck that she says out here. If you go back and you take a look at those October 2014 lows out here, you saw the Dow's price oscillator get above the 2.5 level. That was on the trading day of October 27, 2014. That clearly led to higher price for quite some time. In fact, not the final top, but a top was put in on December the 5th out there. The last time that the Dow's oscillator got above that 2.5 reading out here, that took place on July 13th. Price moved higher for 2, 4, 5 more days out there. So when I say a promise of higher price, you can see it's got quite a range out there, and you've got to take a look at the other patterns that exist inside the marketplace. Where is it that the Dow could move to? Hey, if it responds positively, 17,163 is not out of the question. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 47, S&P's up 6, Composite up 24, Russell's up 12 points. So when we took a look at our first set of tells out there, our early set of tells, we've got the price oscillators in 3 of the indices that we follow above their, what we'll call it, their jet propulsion territory area. So that's number 1. That's the initial message. That's the message at 1:24 in the afternoon. If we go take a look at the VIX index, see what it's doing. Now here's where we haven't gotten the, we'll call it the confirming tell, because we've had one heck of a nice bounce. Right now, we have to call this bounce a counter trend rally. At least I believe we still need to call this a counter trend rally, which can extend itself. If we take the reason I say that is if we take a look at the VIX index, the upper portion of my screen right now, panel 1 we'll call it, what you'll see is you'll see a solid yellow line out there. Let me see if I get my cursor working here. I've had some problems with that, so just give me a moment. What you'll see on that yellow line, it's priced at about, what, 20.56 out here, but it'd be a whole lot easier if I get my cursor working on this slide. I don't want to have to redo it. Okay, good. It's working for you, so I must have paid the bill. Now, you'll see that price today, the low of today inside the VIX index, 2103. 2103 is still above 2056. Now, that 50-day exponential moving average line is one of our liquidity gauges. Price when the price of the VIX is above the 50-day, that's when you see that's when you can see major destruction in price out here. And really, if we take a look at, just as a most recent example, on August 19th, you saw a close above that level. Obviously, the VIX went, ballistic. It truly didn't go to the moon. It went to Mars out there. So it really took off, and we saw the price destruction. Now, again, for those of you that are new to the show or you haven't heard me over time, there are different people that utilize the VIX index in many different ways. I'm just giving you the way that, in my opinion, in my experience, it works best. And it's just really simple tool out here. So it's simple. Keeping it simple, Steve, is really what it's all about, right? Yeah, you're out there selling things, using things, or what have you. You know that keeping it simple is the best approach out there. Linking the known to the unknown. Well, here's the known to the unknown. If you take a look at, now we're back at the September 2008 timeframe, and you'll see that's where my crosshair is at. September 2008, we saw the VIX go ahead and move above that 50-day exponential moving average, right? And from that point forward, the VIX stayed above it all the way until about November 26, 2008, where we saw just a bounce for a few days out there. So it's in relation, has nothing to do with the number. Back then it was a 22, so similar to where we're at right now. Price got up into, about the 93 level out there. It doesn't really matter what price gets up to. It matters where it is in relation to that 50-day exponential moving average out here. When price gets below it, you see the market do one of two things: either move higher or go ahead and move sideways. And back right around the time frame of December 12, 2008, we saw the VIX move down below it. We saw the S&P 500 move sideways to slightly higher. So that is a way to use it. And right now, we don't have a tell inside. Well, if we were going to say we have a tell, right now the tell is that the VIX index is saying not so fast, right? So you've got, now, what will change is if today, you get those price oscillators to close above their upper threshold levels. They're already there right now. And you get the VIX index on the cash VIX index to close below 2056. If it closes below 2056, it's going to head lower. You might say, how low could the VIX go, right? Just as if you and I were doing one of those, going underneath one of those little bars out there. I don't do that too often. How low can it go? 1875 would be the next stop. So any VIX that gets below this level that I gave you, what was it again? 2056. Anticipate that the VIX will go down to 1875. So if you're in one of the volatility vehicles, get ready for either side of the trade out there. But again, it closed below 2056. You wouldn't want to be on the wrong side of the trade out here. And I can make the case that not only will it go to 1875 if it closes below that level, I'll tell you that it'll go down to about $11.44 out there. So those are the parameters to be focused on and paying attention to. We could go take a look at so let's go take a look at the liquidity, right? Let's go because I like to use that VIX as really a liquidity gauge, right? Why is it, if you ask yourself the question, if Stevie's premise is right, that when the VIX is above the 50-day, why does the markets go down? It's because there's lack of liquidity in the marketplace. When the VIX index is below the 50, why is it the market goes sideways to higher? Because it's telling you you've got liquidity. One of the other liquidity gauges that's out there is certainly the euro-Japanese yen, the currency pair. And if we go take a look at its tell out here, it's not headed south. It's not headed north in a big way, but it is trying to take out its most recent swing point from September 14th, and that high is 137.04. Hey, if after today's session, maybe there's no fireworks whatsoever, if you see the euro get above that level, that says you got more liquidity inside the market. Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 56, S&P's up 8, Composites up 27. So what you and I did here during the last two segments is we covered what the message of the markets are right now, what it is that we need to look for at the end of the day to help guide us as to what the markets actually want to do. We also took a look at two liquidity gauges out there, the VIX index and the Euro-Japanese yen, what I call the carry trade currency pair for us to watch what the market wants to do, the stock market, meaning, the NASDAQ, the S&P, and so forth. Now, there is a third liquidity gauge out there. I received a number of emails, since last week, I don't remember, Thursday, Friday, asking me, those folks that saw the David Tepper interview on CNBC where he started talking about the outflows of cash and rivers and so forth, and and I tried to listen to some of it, but quite frankly, I thought that, for an intelligent guy, which he is, he could have found an easier way to communicate. So I'm going to make an attempt at an easier way to communicate. Now, this is not what he was talking about, but it is a tool that I use from time to time, and I pay attention to it because it's an additional roadmap as to what I believe is going on, because you've got to follow the money. So the question becomes, how do you follow the money? Well, one of the ways that you can follow the money is by taking a look at the CFTC data, right? The Commitment of Traders data that comes out each Friday at 3:30 in the afternoon. Now, it's huge spreadsheet information. So if you're not a spreadsheet person, it's not going to do you a whole lot of good. Now, you've got to be able to take that data and really manipulate it, massage. When I say manipulate it, you've got to adjust it. Manipulation doesn't mean to try to obtain some outcome. You're looking for a pattern that's in play out here. So when it's just taking the data as is, which is often how people report on it, and then when I see the blurbs come across my screen, I'm always going, why are they doing that? These are supposedly people that are supposed to have knowledge, and all they're doing is regurgitating bad information, which happens. Look, here's what I'm going to give you, which is, I believe, is good information. It's the euro dollar. So one of the, and I'm not referring to the euro currency pair. Okay, the euro dollar is really what is referred to as really the largest source of global finance. So the prefix of that word euro, it's really just used to indicate any currency held in a country where it's not the official currency. So it'd be dollars over in Europe, or the euro yen would be dollars over in Japan, US dollars over in Japan. And the CFTC also puts together the 3-month euro dollar futures contract, which is basically a derivative on interest rate paid on those deposits. Now, you can take a look at that data. And what I learned was that if you take that data, because this is really the help of identifying the source of the river, the source of cash, because what I've been able to find, and it doesn't work all the time, right? Nothing that we use, technical analysis, works all the time. But this works one heck of a lot of the time. In fact, it's really important to pay attention to. If you take that data and you take a look at what the large commercial traders, the CFTC breaks the data down into 3 different categories. What you and I want to focus on are the big ships, the big boats, the guys who can afford to truly get their positions ready. It's why we take a look at it in relation to gold and silver. Light sweet crude sometimes it's not working. I don't pay attention to it in the case of light sweet crude right now. But back to the euro dollar, okay? If you take a look at what the large commercial traders are doing, so you can take a look at their net long, net short position, that is step number 1. Step number 2 is then offsetting it by a period of time, usually between 50 and 63 months out there, meaning I push it forward by that time period. Why? This is the largest source of global finance. This takes a while in order for liquidity. The premise is it takes a while, maybe up to a year, before this liquidity, this river, right? Just like a tidal wave, right? Tidal wave begins out in the ocean, and it takes a while before it gets on shore. This is the tidal wave for the market. So when David Tepper was talking about outflows of cash, he could have easily said, look, all you have to really do, folks, is go take a look at a 3-month euro dollar and take a look at what the net position is for the large commercial traders. And go ahead and push that forward by 52 weeks to give yourself an idea as to the direction of where cash is going. What you will notice, and I push this forward right here, this bottom that you're taking a look at, even though it says it's got 2000, this has been pushed forward. This was really the 2013 low in the euro dollar pushed forward, which happens to coincide approximately with that October 2014 low. And since that October 2014 low, we've seen the market move higher. Now, look, here's the deal. This top inside this euro dollar is supposed to hit sometime in early October. We're September 17th. Those price oscillators, if in fact they do close above the level, now this can start any time. Remember, I've pushed this forward 52 weeks. So I'm not going to sit here and say, it's supposed to take place on October 5th. Because quite frankly, to be off by 2 weeks would not be a stretch. And maybe it is September 17th or 18th or 19th, okay? What this is telling me is that flow, that river that's out there, is about to change. That tide is about to change in a fairly large way. Somebody says repost. I'm seeing the Dow Jones. Wow, that's a bummer. Let me do this here. Let me do this, folks, because I want to make sure that you are taking a look at that chart out here. So hopefully you can see this. Now, that's just going to be my normal screen that pops up here. But in the Dan, maybe somebody can go ahead and give me the high sign from the current slide. There we go. So there is the chart for the 3-month euro dollar. Boy, you hate to talk about something for a period of 10 minutes that you could be looking at it and then not see it. So hopefully you guys in the Den, Tiger TV, you are taking a look at this. So this shows that the tide is about to change. We're going to have to use other tools in order to be able to time this. But what this says, okay, is that we ought to be that, you know how you ride a roller coaster and, that first curve, it just freaks you out. You're up at the top and you get that first curve and it seems like that's not really the big move to the downside. Well, guess what? I don't think that first curve that we saw was really the big move to the downside. If, in fact, this chart takes hold, as well as other things that you and I can focus on. So I'm not here to scare you, but you can see, and I've just got this going out into the early part of 2016. This shows that the market moves down into October, November, like it normally does, before we see a little bit of a nice, healthy Santa Claus rally, so to speak, and then it continues to move down to the downside. This happens to be tying out to the correlation of what's going on inside the markets. You've seen this chart. I believe you've seen this chart before. I'll go ahead and post this for you. And this is the chart. Now, this was from last week when I did Tom's show. But this is a separate chart altogether. So you just take that euro dollar, that because you're pushing it forward by 50 to 60 weeks out there, that's just something that exists. Now, when you tie that into the tops that were made in 2000, the tops that were made in 2007, and where we're at right now in the Dow, the May 19th top, and you start those each at the same time period, what you are seeing here is the daily analog. And that daily analog, because I believe that the top that we're more likely in right now, not the same market condition, but the topping pattern that we are in right now, the pattern for what the market is going to do or wants to do is one that's following the black line here, the 2007 top. Remember, when we take a look at the tops out here, that each of these tops have done, in essence, the same thing. Here is the chart that shows that when the high was made in 2000, it was made with that seventh wave top. When the high was made in 2007, it was made with that seventh wave top. Thus far, the high that's been made in 2015 has been made with that seventh wave top. Price relative strength divergence. You and I called the bottom a few days ago inside the market utilizing that same pattern, right? Price relative strength divergent pattern in 2000, 2007, 2015. Now we've got that trend line, which, by the way, that trend line has held. If we go take a look at that trend line right now, that's why it doesn't require any action. But what you want to be able to do is anticipate. Here's the Dow. Here's the current chart now for the Dow's trend line. We can see that the price of the Dow is up into resistance. If you just simply take a diagonal line from the high in 2000, the high in 2007, price certainly broke above it, but it came back down to test that level. That's what it did during the month of August. Now we're in the month of September. Price has bumped its head up against that. Doesn't mean that it can't move higher, because it most certainly can. What you and I want to be doing is really watching the red line. Like, this is a red line that you want to pay attention to. We may have folks out there that draw red lines that they don't really mean anything. This red line matters. And if in the month of September we see a close below that red line, that is the trend line coming off of the March 2009 lows. That says that what's likely to happen is the same things that happened in 2000 and 2007 when those trend lines were broken. Because you see, we've made similar type tops with regard to patterns. Now what we're trying to find out is price really just pulled back during the, we'll call it whatever the scare was, the China scare, the China syndrome, right? There was that movie out there. Have they already called it the China syndrome? So maybe it was just the China syndrome. Of course, that was about what, nuclear power plants out there? Look, when it comes to your money and you start to see this move to the downside, that can become a syndrome for sure. Look, it will be a syndrome. My opinion is it will be a syndrome if you see price close below it. At this stage here, prices just simply come back to a level of support. Any of us that are going to call it any other way are just, well, that's what I'm going to call it. because I'm just going to simply use the keep it simple Steve approach and take a look at those trend lines. So we've got a roadmap out here. What we need to do is just let the market go ahead and tell us what it's going to do. At this stage, support has held. If we go take a look at, here's another interesting way to take a look at the markets. Now, this is the New York Stock Exchange. We haven't looked at this for a while, you and I, but here's our weekly chart for the New York Stock Exchange, and we're taking a look at both weekly and monthly horizontal trading range boundary lines. Now, you may say, what in the heck is that? If we go let me go ahead and take off the monthly off of here. Just give me a moment to do that. Go ahead and take, those are going to be the red lines. We're just taking a look at green lines now. Here's the New York Stock Exchange, just looking at it a different way. And what these green horizontal lines are is, and this is a weekly chart that you and I are looking at, we're trying to identify the largest number of co-located. That means it doesn't matter whether it's an open or close. We're using the body of the candle to help us identify where the largest number of conjunctions are, the largest number of opens and closes. Let me go ahead and if I do that, will that work? There you go. So what you can see is at the price point of 67.67, there are 41 opens and closes since about what, I take this back to 1995. That's our largest area of where price has been most comfortable. The second largest area is up at 83.78. We had 25 opens or closes during this time period. That really sets up our range out here. So the little dotted lines that you're looking at are nothing more than the midpoints. These levels typically act as good areas of support and resistance. You break through one, typically you come back, you test it, and if you hold it, then you're going to go ahead and move up to the next level. The midpoint, then finally the larger, the thicker line out here. Now, what's interesting, if we take a look at the New York Stock Exchange, because we need to take a look at both the bullish and the bearish outcome, during the China syndrome, price pulled back to what? The diagonal level of support. That's the trend line. That's the green arrow, the trend line off of that March 2009 low. And where price came back to was where? Came back to one of those horizontal trading ranges on the weekly. Now I'll go ahead and decorate it because I can go ahead and add the monthly lines. Even though we're on a weekly chart, that's going to be red. So we can see where those line up. And look, the close of a weekly chart is going to be different than the close of a monthly chart. And that's why you're going to see some nuances and some differences here. So we know that price inside the New York Stock Exchange, just like we were looking at the Dow earlier, up against significant level of support. And if this significant level of support breaks, that tells us that the pattern that you and I just looked at, which is months and months and months of lower price. That doesn't mean we don't have nice, healthy bounces, but it does say, as you and I take a look at that 3-month euro-dollar chart, as we take a look at the analog pattern to either 2000 or 2007, that says that prices will move lower into 2016. Is it January, February, March, April, beyond that? I don't know. You and I won't know, but along the way, we'll be able to play the market in both directions. But at this stage here, we've got plenty of information. The cool thing about this is that we're not that much further away from support to see if it holds or breaks. So, and we're not that far off of the high when we take a look at the Dow and the New York Stock Exchange, because if we're able to catch it this early. So here is, hopefully this is my explanation, and that hopefully makes it easy for you to understand what the markets are or are not doing out there. And there are times when you are playing poker, as we are today with regard to Janet Yellen, where you have to wait for the next card to be played. Look, we can go take a look at our hand, okay, long or short, and we can go see what the market is telling us right now, but it really all is dependent upon the next card. Right? You know, we've already got the flop, and you're taking a look at 3 cards in front of you. You're taking a look at your hand, and at this stage here, maybe you've got 2 pair. But the guy to the left of you or the gal to the right of you, they might be holding 3 of a kind, and maybe it's 3 deuces. Who knows out there? But your hand gets a whole lot better on that next card. So in this case, if you're not in the market, that's a good position. Wait for the next card and then be willing to take action, whatever that action might be, utilizing this set of tools that we've taken a look at. So hopefully that assists you with regard to both the bullish and the bearish side of the market. So we've got about 10 minutes before the Fed releases its minutes. We'll go take a look at some 30, 120, 300-minute charts, anything we can to see if there's any other information. Steve Rhodes with TFNN. Dow's up 38, S&P's up 5. We'll be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. This coming Tuesday, September 22nd, Tom O'Brien will publish the 700th issue of his weekly newsletter, The Gold Report. It's amazing to think that Tom started his newsletter over 13 years ago when gold was trading under $300 an ounce. To celebrate the 700th issue, you can sign up right now at a 20% savings off the regular monthly price, and you can lock in that low rate for as long as you remain a subscriber. The Gold Report is Tom's weekly newsletter covering the gold market as well as a variety of gold mining equities. The Gold Report is published every Tuesday afternoon with a market update sent out to subscribers on Monday mornings. Tom will walk you through what's going on in the gold and metals market each week, as well as providing specific buy and sell recommendation on the mining equities themselves. Now is the perfect time to sign up for the Gold Report. The 700th issue is published Tuesday, and that's when this sale ends, so act now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. One of the questions that came in during the break was if I would take a look at the seasonal pattern of natural gas. So let's go put that up on my screen. Unlike some of the other seasonal patterns where I've shown you 80-plus years worth of work, this one just has the last 11 Although I think I might have done this work in 2004. Oh, I know I didn't do it in 2015. So it probably does not include the 2014 data. But here we go. When we take a look at natural gas, you're looking at the last 11 years worth of, so when I say the last 11, we're going to call it through, it's either 2013 or 2014. And what this shows is that natural gas typically peaks in the early part of the summertime, sometime around, we'll call it just mid-June out there. We're not using this to be exact to the day, but we are taking a look at seasonal patterns. It also says that natural gas bottoms sometime in the early part of September. So we are early to middle part of September. In fact, more towards the middle early than the late part. So the reason that someone I would believe is asking is because they're trying to identify a bottom inside of natural gas. And if we go ahead and we take a look at the October contract, so the active contract for natural gas right now, in fact, if you go back to that other chart, you can see how it's moved, down as you would have anticipated. Where's June? Let's see. Here's the middle of June out here. So here's natural gas, June 17th, the middle of June, priced out at, see if I can read it, right in the about the $3 area. And today it actually made a low, got down into the 260 range. So the seasonal pattern that you and I just looked at that said, hey, it's not going to be, you're not going to play this by day, right? So I'll put that back up on my screen so you can take a look at it, right? A high in the middle of June, a low sometime in September. If we go back to it, guess what? A high up here, the actual high that we're looking at really came back in the middle of May. But I'm just looking at what took place from the middle of June to where we're at now, and we can see that that seasonal pattern is in play. So how do you do this? Well, one, if you were going to play this, you'd certainly want to see, since you've got some pretty decent volume, you want to see a rejection of swing points. And you, in essence, have that today, but you've got to go back and take a look at volume. The swing points that you and I are looking at right now is going to be April 27th. It's going to be June the 4th. And those are, and I guess you could say it's probably September the 2nd out there. Now, if we're going to use September the 2nd, you had 94,000 contracts. The following day, 81,000, and today, 134,000. If this were a blowout low, which it could be, but I would say that what you're really looking for is at least a retest of today's low. You at least want to see this get above the TAS market profile low, which is priced out at about, where's the bottom, 265. You're trading at you're 265.9. You're trading just slightly below that level. You'd like to see some type of bullish reversal signal out here, which you don't have, which says that you can certainly go to lower lows out here. So, go back to the other futures contracts, figure out the volumes. I'm going to guess at this stage, well, you don't want to guess. You don't even need to guess. Now, we can go take a look at the UNG as an example, but you really want to take a look at the contracts when you're measuring volume. I don't know why it won't do that. Come on, do this. There we go. Just delete it. That's the way it will work. So if we go take a look at UNG, you're looking at April 27th. That had volume there, 7 million shares. Today, you've done 3.5. So the UNG doesn't show the volume that the current contract showed. We probably used a swing point in June. That had 8.9. So the UNG is showing light volume. I'm not sure what the discrepancy is. One of the two is off. But just do your work on it. So this suggests that a bottom inside natural gas may be coming. So, folks, hope that helps you out with regard to the overall view. We'll be back with you tomorrow. Hang on to your seatbelts, and our man David White is going to take it on home from here. Have a great Thursday. Look forward to seeing you tomorrow. Thanks, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.